Hey everyone, what's going on? Retire on Dividends here, back to make another video in the series for my options trading weekly update. So, I added something. I added rank to my options watch list in case you guys were curious how I do rank them. Let me shrink column A. Will let me. That's it. Okay, so basically, my number one ETF that I love to trade when it's cheap is TSLL, and it's basically because it's what I started with, and it's just been really good to me. I know it could drop right like a blink, boom. It could fly up like a blink, boom. And that's part of it, but it's been really volatile. It could bring in a lot of money. It also has low margin maintenance. You can see right here, 50% in my brokerage, which is awesome. The IV, 95%. This is a beautiful thing, man. And plus, it's affordable. It's still affordable. And when I say affordable, I say it's $21 stock. So if I wanted to do, say, 10 contracts at the current price, the bankroll needed would be $21,000. So that's affordable to me, at least currently. Obviously, if it goes up and up and up, it becomes a little less affordable. Number two on my watch, my second favorite is TNA. I mean, I love it. TNA, again, it's an index. There's nothing more secure than that. Of course, it's a triple leverage index, but still, it's an index. This would be number one if the margin maintenance was 50%. That's for sure. Unfortunately, it's 75%. So it is what it is. So what happens is when I get assigned, unfortunately, I can only borrow 25% of whatever money is I have in TNA, which whatever, it is what it is. Their IV is a little lower, 55%, but again, it's an index. It's the Russell. So it's a little more secure. It doesn't move. It doesn't fluctuate as much as others may. Even though it's triple leverage, I mean, it moves, don't get me wrong, but it's a little more, I'll say, secure. Gives you a little more secure feeling as well. Helps you sleep better at night. The bankroll needed for 10 contracts, though, at the current price is around $43,000. So, a little on the expensive side is what it is. And believe it or not, guys, number three, MISTY. MISTY, obviously, this is a yield max fund. And I love it. I love that they have weekly options now. And they pay such a sweet-ass distribution that, again, I can trade this a little differently because if I get assigned, who cares? Who cares if I get assigned? Because if I have to hold these, if I'm a bag holder, at least I'm going to get paid a high distribution. So I'm going to play these a little differently. And I do like that fact that I can play a little differently. Plus, they're 50% margin maintenance. And they're a little more affordable, $26. I'm not going to go in detail on the rest, but down the line, Soxol, then NVDX, then MSTU, then TQQQ, UPRO, Bitex, Mara. Last but not least, CLSK. I haven't really traded that one, to be honest, though. All right. Also, let me give you an update on my balance and if I'm kind of staying in line with what I wanted to. Let me zoom in. See. There you go. So, the goal, it says what it says, but, high yield ETFs, I'm saying I should have 30%. It looks like I have 54%. Obviously, that means maybe they did go up in price. I'm not sure, but actually, this is wrong. G20. G16, yeah, divided by G20, okay. G divided by G20, G19 divided by G20, okay. And then this adds 6. Obviously, it's calculating 115%. G20 minus 19, 18. Oh, I have to add 17, duh. All right, makes more sense. Duh. All right. So yeah, currently I'm at 39% in high yield ETFs, which is okay. whatever. But again, since that's the case, I'm really not buying any more high yield ETFs. I'm really using my cash for options. So I did add a row. Now I have assigned options and I have pending options. Overall, though, I want that to be 45% of my money. Right now, I'm only at 14.5% because so far I got assigned on about $9,733 worth, which you'll see in a second who that is. And then I added pending options, so you guys can see, right? When I sell a put or sell a call, right? There's an amount that gets reflected in your brokerage, just like Yield Max, right? And it shows like a negative amount. It pushes down your balance. So, again, and it shows you if I wanted to close it, like that's how much it would cost. That's the current value of the actual contract. So right now I'm showing negative $528 for the pending options, which obviously I had to add manually. And then in cash, I got $29,000 in cash, which is not bad. Again, it's more than I should have. But again, I've been playing it a little safe, and I'm kind of slowly getting my way back into, slight degeneracy in order to make a little more money. All right, now let's get to the main event here. Options time. Here we go. All right, let me see. How far can I zoom without screwing up the? Yeah, there you go. Okay. All right, so from the top. MISTY, again, this is an old put I opened on January 24th. It expires February 21st. It's still open. This is a put with a $26 strike price. I did add this column too, as at out of the money. Should I make it a different color? I probably should, to be honest. Maybe bolder blue, right? Or maybe this bold. I like that blue. All right, so currently it's 2.73% out of the money. So, will I get assigned? Who knows? Who cares, right? Again, because if I own more MISTY, guess what? It'll lower my cost basis and I'll get more distributions. All right, here's the other MISTY put. This one I did on 127. I sold it put for $25 strike price. This one's 6.47% out of the money. So again, we'll see how that plays out. All right, moving on. I did have two other contracts from last week that expired this week. This one was a TNA put, $41 strike price. And obviously, TNA, what did they close at? If we go here, $43.87. So since TNA closed above the $41 strike price, this $45, right? I kept that premium. And then see this collateral, this $4,100 in collateral, right? The pending, that's gone, right? That's no longer, pending. I get that right back into my cash. I get that money back because this contract expired worthless. All right, makes sense. The next one, NVDX. Again, I sold a put $950. This time, again, NVDX kind of recovered. So if you go here, NVDX way on the bottom. They closed at $11.96 yesterday. So let's go back to my put. My put was $950. So obviously, they closed above $950. So again, I keep that $28. I get the $950 back in cash because this contract expired worthless. All right, now we're on the new week. All right, new week. So I did a decent amount of trades. I didn't make too much money, but I did a decent amount of trades. NVDX, again, I had a blast with. But what happened was it actually, I sold puts when it was down, and then it kind of recovered, and it's getting a little expensive again. But regardless, it was still at $9.83. I sold a put on them, a $9 put. It was 8.44% out of the money. You could see it closed at 24% out of the money. So obviously, if it closed out of the money, you can guess, yes, it expired worthless. So this one paid me $25 in premium, which yielded me 175% on an annualized basis. So you can't go wrong. But again, that one expired worthless, and I got my money back. I let it expire worthless. I had the opportunity to close it out early, and I had this ongoing discussion in the Discord. I'm like, should I pay money to close it out early? And there's reasons why you should, and there's reasons why I don't. The reasons you should is if I needed this $900 to use for something else. The other reason is I don't want to risk getting assigned. So in case it starts to tank, If I have an opportunity to close it early, take, a percentage of the majority percentage of my profit, then that would be a smart move. However, it was so far out of the money. I'm like, guess what? I'm pretty comfortable to say it's not going to get assigned. So I'm not going to pay a dime. Why pay? At the time, it was, $3, right, in total to close it. I'm like, I'm going to keep my $3 and I'm going to take the risk and let it, run into the end of the week. And it was a good move, apparently, because it did expire worthless. All right. Moving on, TNA, you could tell I'm trying to go a little more detailed this time around. Hopefully you guys are interested in this information, but feedback is always welcome. All right. February 3rd, which again, I believe was the Monday, I sold a put on TNA. TNA was at 43.18. I sold a put at $39 strike price. At the time, it was 9.68% out of the money. You could see it closed at 11.10%, right? Because TNA closed at what? Let's go back down. 43.87. So obviously my $39 put expired worthless. I collected $38 in premium for that, which is a annualized yield of 61%. So not bad. Easy money right there, right? Now, here, I still had 100 shares of TNA, and I was waiting to sell calls, and I ended up selling calls when it was red, which ended up being a mistake because it did recover decently. But anyway, it was at 43.15 at the time. Keep in mind, my cost basis is 41.50. I mean, it was at 43.15, and my cost basis is 41.50, but I sold it for a $45 strike price, which was 4.29% out of the money at the time. And you can see it's still closed out of the money. What does that mean? That means I keep my shares still. It was close, though. What was it again? 43.87. It was above 45 yesterday, on expiration date. And luckily it came back down and I get to keep my shares. But regardless, I collected $80 for that, which yielded me 116% annualized. So if you think about it, right, based on what it closed at, I could have really done a 44 strike, right? Because it closed at 43.87. But obviously, yeah, that's super, super risky because my goal with this 100 shares is to abuse the hell out of it. I'd like to keep it and, week in and week out and continue to sell calls on it as long as I can. But again, I have to get a decent premium. So I do consider, 160% yield a decent premium, by the way. So that's pretty good money. All right, let's move on. TSLL, this was on February 5th. So the 3rd was the Monday? This is probably the Wednesday. TSLL was at 24.08. So I sold a put at 22. At the time, it was 8.64% out of the money. Guess what? It closed in the money, 4.12%. TSLL closed at $21.13. You know what that means? I got assigned. So I've got paid $24 in premium. This yielded me 137%, but I got assigned 100 shares at $22. And that's okay, guys. That's completely fine. You know why? Because I can sell calls next week. And probably right away. Because why? Because TSLL is basically really close to my cost basis. In fact, I sold a put at 21. This one almost got assigned as well. You could, obviously it closed right above 21, but this one ended up expiring worthless. But I got paid $30 for this one, which, this calculated to be a 360% annualized yield. Now check out this move. So MISTY, on the Thursday, I was like, you know what? I own 100 shares of MISTY. My cost basis sucks. It's $33. MISTY was at $27.28 at the time. I sold a $27 put. I said, yeah, you know what? I could use the shares. So let me just sell put close to the money. It was only 1% out of the money. And then MISTY, is going up, down, all around. But in the end, MISTY closed at $26.73. So it closed right below the $27 strike price. So guess what? I got paid $33, right? $33 for buying MISTY at $27. So I got assigned, which is great because now my cost basis went from 33 to 30, which is a pretty nice drop. All right. Now, the rest of these trades here, these are going to go into next week. All right. Keep that in mind because so there is no result yet. TSLL was at 22.33, and I sold another put $20, 10.43% out of the money at the time. Now it's actually 5.35% out of the money as of the close. But this one paid me $40, and that yielded me 104% on an annualized basis. All right. TNA was at $43.86. I sold a put on them. $41, 6.52% out of the money at the time. Currently, it's 6.54% out of the money. That paid me 57 cents per share. Times 100, of course, is $57, and that yielded me 72% on an annualized basis. And then TSLL, it was tanking. It was tanking a lot on Friday. It went down to 22.06, so I went a little overboard. I sold, I sold 3 puts in one day. That's not like me, but again, I gotta get in the game. So I'm getting in the game. So I sold a put, $19 put, 13.87% out of the money at the time, and now it's 10.08% out of the money. I got 23 cents per share, or $23, and that was an annualized yield of 63%. Obviously, I yielded a little less on that one because I was a little less aggressive. You can see I went 13% out of the money versus, here I went 10% out of the money. All right, makes sense? And then again, TSLL was continuing to go down. It was at $21.19 at the time. I sold yet another put, this one at $18, even further out of the money, 15% out of the money. So I got a little less premium, 21 cents per share, or $21 total. And that one yielded me 60% on an annualized basis. So very busy week, but again, fun time trading options, playing it safe, playing a little conservative, but and the reason is because I always want to play. I don't want to be stuck being a bag holder, holding shares, can't do options. I want to always play. I always want to trade. And again, overall, I'd say a pretty good week. So if I go to the down here to see what income so far for the month of February, which happens to be my weekly income, month of February, I made $371. Again, much less than what I wanted. So I may have to go, a little more aggressive next week in order to, again, I have goals and I have to hit those goals, at a minimum. Because now, especially, I have payments. I have a mortgage coming out of the account where I trade options. So I have to at least make that. Plus, really I need to make whatever the goal is for the month. And options trading is a lot of that goal. Of course, high yield ETFs play a part in that as well. So we'll see what happens. Anyway, let's move on to the tabs to see the result of all that action. So here's the 100 shares. I got assigned 100 shares, $22 strike price. And TSLL closed at $21.13. And I do have 3 pending puts, 18, 19, and 20. So if TSLL continues to go down, what I could do is I could add to the put party. And again, lower my cost basis. If TSLL opens green on Monday, then I could, of course, consider closing these puts out early and at the same time selling a call on my 100 shares at $22 strike price or above. Probably do above because, again, I used to always just do at the money, collect the premium, and move on, which would pay me a lot of premium. However, like I've been saying, I want to give my calls a fighting chance now. I want to give it, I want to give some capital, just some capital appreciation, give it a fighting chance, and collect somewhat of a decent premium. So I won't go too far out of the money, but enough to make it worth it. NVDX, all of my NVDX expired worthless. And as you saw, man, they've recovered a lot. So I didn't sell any puts on them because I need to wait. I feel like they could come back down. If not, we'll see how it is. Plus, I'm already trading. I have TSLL going. I got TNA going. I got MISTY going. So no rush to trade NVDX. TNA, all right. So TNA, as I had 200 shares. The 42 strike, that got called away. I made $45 on that. Great. And then I moved on, right? No, I'm sorry. The 41 got called away. I made $42 on that. And then I got, whatever. So now we have, there's no pending calls, so I could delete this. There's no more pending call on the 100 shares. So guess what? Again, I take the overall average cost basis, $41.50. TNA is currently at $43.87. So next week, regardless of how TNA opens, I can sell calls right away. I mean, unless it goes down to 35, which is not happening. But, if TNA opens green, I am 100% selling my call on Monday. If TNA opens red, I'll have to think about it. But at this point, if I get called away, I had my fun. So if this gets called away, it doesn't matter. So I could be ballsy and sell a call at 41.50 and say, hey, if it goes down, bring it on. I'll keep my shares and I'll get a nice premium. If it goes up, fine, bye bye. But again, I say that now, then I change my mind. But we'll see how TNA opens on Monday. Of course, there's a put party going. I got one put at $41. $41 if assigned would lower my cost basis from 41.50. Obviously not much lower, but it would lower it, so that's good. Soxel, nothing yet. Haven't traded them this year. Misty, again, I got assigned 100 shares at the $27. You could see previously I got assigned 100 shares at 33. That was on December 20th. And then, so my new cost basis is 200 shares at $30. Currently, Misty's at $26.73. So can I sell calls? Not really, because selling calls at 30 or above is really probably not going to pay much premium. Not to mention, next week is distribution week, declaration week. So it's probably going to drop, decent amount too. So hopefully MSTR actually starts going back up. Bitcoin goes back up and Misty can get back into the 30s. But if not, I will continue to sell puts. In fact, I already have 2 puts pending that expire in 2/21, 25, and 26. So we'll see how that goes, and we'll see what the future brings us. But again, like I said, if I'm a bag holder on Misty, I don't care. This is both. This is both the high yield ETF that I can hold and both an options play. That's the beauty of this one. So I love it. MSTU, I haven't touched for this year either. In fact, am I ever going to play MSTY and MSTU at the same time? I guess I could, but that's kind of overexposure, if you ask me, in one stock. So I'm not sure if it's worth it. Anyway, weekly income, I made $371 as compared to last week. It's a slight decline, which is okay. And I used more capital than last week, that's for sure. I used $25,915 in capital. So my weekly yield was actually only 1.43%. And if I annualize that, sucker! Anyway, that's 74%, which is not that great. But again, it's hitting my goal. My new goal, my new yield is really 50%. As an overall portfolio, that's my goal. It was 40, then I jumped it to 60 when I used margin, and now I'm back into reality, and I'm using a 50% overall goal. So I want to yield 50% on an annualized basis on my portfolio, and I think that's very, very doable. So yeah, based on this week, I did yield over that. However, I do have to keep in mind I am holding a decent amount in cash, which is yielding basically nothing. So I have to compensate for that money that's not doing anything. Okay, makes sense? All right. Anyway, moving on. And I know someone's going to say there's funds you could buy into, blah, 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 that earn. But then you got to sell in and sell out. Like Fidelity does it automatically. They do like a sweep, which is awesome. Schwab, again, I know I do need to look at that. So I am keeping that in the back of my head as because I'm consistently holding cash now. So I probably should put it into, a safe high yielder. Like when I say high, I mean like 4 or 5%, like a Schwab ETF or money market, I should say. Anyway, let's move on. All right, hypothetical time. So my average yield has been 235%. My latest portfolio update actually was a kind of a letdown. I only yielded 44%, which is under my 50% goal. But again, that was mainly because my options trading was weak. It was weak because I didn't make enough income. And you could see that I'm already starting off weak for the month of February. So I do need to step it up. I do need to make some degen plays. Not all degen plays, but I do need to make some, some brash plays that I need to, that'll bring in the premium. So next week, you may see some of that because, again, I'm not completely conservative. I'm just somewhat conservative. And I've been playing it a little too safe. I'll say that. Anyway, so that being said, hypothetical, how much do we need? What's our annual income? What do people live off of nowadays? All right, let's see if someone needed to live off $300,000. To live off 300,000, how much money do you need? Well, again, with my what I'm yielding, if you use all that money, technically 127,000. If you yielded 235% on an annualized basis. Of course, yes, I know that's not realistic. So I use, if I go to the actual, if I yield the 44%, which I did last time, I need $674,000 to make 300K a year. Now that I could safely say is very, very doable, 100% doable. And again, these are numbers that to the outside world, they'd be like, yeah, you're dreaming, buddy. You ain't making that. But they really just don't know. They don't know. And I really, again, I make this video. This is not really like a teaching video. It's just an account update. But, I also would love to teach beginners because, I consider myself a beginner, which is kind of good too because I could speak the language of a beginner. But again, I hope you guys who watch this video, you could share this video with your friends and your family to help, if they're involved in investing, they want to learn more about investing, making more for bang for their buck. The options is the way to go. Of course, if they don't want to do options, they could just buy the high yielders and let them do the job, pay them the expense. But man, oh man, it is so, so worth it to learn. You guys would never, never regret it. But anyway, so that's the update on my options trading journey. Again, I'm having a blast. It's a good time. Options, it's freaking awesome. Everyone in the Discord, a lot of them watch my video. They know what I'm talking about. We have a blast. We update each other with our trades as they show. So I'll pin the Discord in the top of the comments. Go to the options trading channel. You'll see what I'm talking about. If you're new, don't be scared. Just say, I'm new. Can you guys help me out? But you have to be willing to put in some work yourself, obviously, and be willing to learn and have an idea of what you want to do. If you simply just want to make income, then just say, all right, I want to learn the wheel strategy. And then we can go from there, right? Simply, that's what I do. I do the wheel. I don't buy calls. I sell calls. I don't buy puts. I sell puts. And the reason I sell is because I want the income, all right? Those buyers, they could pay me, right? They could pay me. Let them buy all they want. I'm selling. I'm selling for that premium. And I'm making that income. All right, guys. So that's the update on my options trading journey for the week. So I hope you guys enjoyed this video. Actually, I should probably start saying the date. I know it's in the title. Today is February 8th for context, February 8th, 2025. So I do hope this video helped you guys out. If you have any questions, leave them down below in the comments. Or if you want to have a detailed discussion, feel free to join the Discord like I said. As always, this is not financial advice. I am not a financial advisor. This video is for fun and entertainment. So hopefully you had fun. Hopefully you're entertained. If not, we will try again next week. And yeah, I just want to say I appreciate you guys watching this video week in and week out. This video has always been my least popular video, but I have to say it is growing. The view count is growing. So this could be one day, this could be my most popular video. And that would make me so happy. It's hard to compete with my morning daily video because that is a good one. People love that one. And that one, obviously, it involves a lot of work. And this video, this is just work throughout the week, but it's just a summary of kind of what I did. So it's not that hard for me to make this video. In fact, I love making this video. And I would love to capitalize and make additional content related to what I'm doing, of course, in due time. But right now, I'm kind of booked up with the current content that I'm doing. Anyway, guys, feedback's always welcome on the video and what you guys think. And of course, again, thank you for watching and have a great day. Later.